The latest reports of what retail traders and investors think about markets have just come out, and the results are going to shock you. So what should we be doing right now as we've approached an all-time high close on markets? Well, in today's video, we'll break down where the biggest dark pool activity has been, the huge gamma squeeze that's going on in one of the most popular stocks in the world, and where the opportunities are for potential turnarounds. There's a lot going on in our special weekend edition. Join us as we cover stocks, commodities, and cryptos for the week ahead. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, there's a lot to break down because we need to look at the latest data, the macro, and of course the flows to see what Wall Street is doing and why many retail traders are potentially making the biggest mistakes right now. Now, what has happened recently? Well, you can see over the last week, there were a couple of big breakout trends. Number one was Nvidia, something we've been focused on based on the huge transactions we saw only 2 weeks ago. Intel, AMD, and many others are all starting to take a look at potentially making big turnarounds. On top of that, we saw Tesla fall through the floor and then get a special government contract. And we've seen so many shenanigans going on. So what exactly could be in store for us over the next couple of weeks? Ironically, one of the worst times for flow management is the end of February. So can we actually go bullish into what has historically been one of the worst times of the year? Well, let's first take a look at sentiment, and it is bad. 47.3% of respondents are bearish over the next 6 months, and only 28.4% of people were actually bullish. So no wonder markets were actually climbing the wall of worry. These mark some of the worst sentiment results we've seen since November of 2023. And if you remember your charts, that is around a point where we turned and actually started to squeeze higher. Often Warren Buffett says when there's fear in the street, of course, you want to be potentially looking at buying. Let's take a look here, though, at bull-bear spread. It's in the floor as well. Negative 20% takes us to one of the worst readings we've seen in years, and it also leads us into usually where we'd be in a dip, and we'd be in a point of potential maximum fear. The difference this time, we're at all-time highs. So why is this? How could it be that we are so bearish across the board in terms of what most people's sentiment is? Of course, on this channel, we haven't been. But why would it be that so many people are bearish? Well, if you guessed it, pause the video, put it in the comments down below right now. Give it a second. If you guessed it was probably the news and media around you, then you would be most likely correct. We often say on this channel, if it's in the press, it's in the price. And this could not be more true when you take a look at what's been happening in recent weeks. Tariffs, geopolitical concerns, up, down, and all around style markets, yet still flows have traditionally been going in to the bullish end. And this is very important because when we take a look at this absolute fear that's going on, at least in terms of the general sentiment reports, and we know this is in crypto, we know this is in, of course, stocks right now, and you look at the forward returns over the next 6 months and 12 months, well, you can see here, they're actually pretty positive. Now, this doesn't mean that we think it's going to be this good. Of course, this is a stat by itself. But we did see over the last 2 weeks, hedge funds in particular go from being net sellers to net buyers. Yeah, things changed. We went sideways for ages. You're going to see where some of the biggest transactions were put in today when we look at that in the dark pools. But big transactions were going through. And of course, this has led us into believing that these wicks and the price action that we've been seeing is overall net bullish. Now, you're going to see a lot of this from the bears right now. And of course, it is completely valid. When we look at flows traditionally coming in near the end of February, because remember, we're at a turning point here for February, we usually see some of the biggest outflows occur in this particular second half of Feb. First half of Feb, pretty good flow in increasing, and second half of Feb is one of the worst months of the year and the worst periods of the year. Now, why is this important? Because often this is the seasonality we get. Go up for half the month, go down for the second half, and then, of course, turn in March. Now, could it be the same as this? Yes, it could, but we'll look at the price action later on to see whether that's really going to happen. And remember, it seems like most people seem to be expecting that because, yeah, that's the statistical truth. That doesn't mean it has to happen every year. Remember, follow price action as our number one read when it comes to flows. Now, speaking of something we do expect to happen in 2025, well, that's going to be a sell-off to the 200-day moving average. We love the 200-day, the 20, the 50, and the 200, some of our favorite indicators on the charts. And as you guys know, since the 1990s, that's over 30 years plus of data, whenever we've seen a calendar year go without touching the 200-day, it has occurred in the next year, and 3 of 5 of those particular times have been in the first Q1. So, of course, this is why there's a little bit of strength to the bear argument in terms of statistics that are going with sometimes it pulls back. Ultimately, though, we need to see the proofing, and with the close at an all-time high, it just hasn't happened right now and right here. When we take a look at why year 3s are much tougher than year 1s and year 2s of bull cycles, it's because they can be up, down, and all around. And of course, that's why 2025 is going to be one of the toughest years for us to trade and invest if we don't have the right tools, particularly dark pool, particularly looking at options, which we do so on this channel, and of course, price action, because we're going to be pushed around by the news narratives. Now, something you're probably not going to see in the news is rail traffic results, and they've been positive every single month for so long now. And again, we've got the latest data here, and it looks pretty good. Basically, rail traffic results, while it's only one read, does show us that generally things are happening in the economy. And you've got to remember, when you see this, when you see our American consumer indicator that we bring up often in the channel, you've got to be generally bullish on those types of reads. Usually we're looking for cracks in the bonds market, we're looking for cracks in the debt markets, those types of things. And when you see those, you can be terrified. Now, for this earnings week, what have we got going on? Well, of course, we have Chinese stocks in focus. And what we've been talking about on the channel recently has been a very strong uptick in China. And of course, we've gone on about that for about 12 to 18 months now, as we've thought it was a bottoming market. And so far, it's been actually one of the best performers in the world. This week will be the test, though. We've got Baidu, which is a very oversold stock, similar to Google in China. And then, of course, we've got Baba as well, which all eyes will be on this one to really see whether it's going to actually be turning around. Now, another couple of things that we've seen recently, and we shared this in our last video, is insiders seem to be buying into healthcare stocks. What is it that they know that many people don't? If you've been watching the channel for a while, you'd know we actually like healthcare this year. And it's because we believe we will go into a defensive style rotation market at some point this year due to concerns over all sorts of administrative changes and, of course, just in the market where it is in the cycle. So XLV is certainly one worth watching. When it comes back to China, you'll be looking at, of course, Baidu, Alibaba, Tencent. All of these earnings are important because they've been turning from not very good growth to potentially positive growth again. When you look at something like BYD, Xiaomi, those kind of stocks, they've already been kicking ass. And when you look at them on a chart, they've been leading the Chinese market out of what we believe has been a pretty heavy recession. Now, let's talk about winters or recessions or something in the crypto market, because it hasn't been very good in recent times. And you guys know exactly why. It's because everyone went too bullish. Again, similar to the markets, everyone's bearish right now. Well, as it turns out, everybody's bearish in crypto as well. Some of the biggest liquidation events, the biggest liquidation event of retail we've ever seen in one day, happened only a week and a half ago now. And as you see, we went from extreme greed to pretty much fear over the last 2 months. So why could crypto do nothing? Well, in many ways, it had to liquidate as many people as possible so it can potentially move to the next direction. In terms of flows, not a great update on flows here. We're not really seeing that strong ETF buying that we probably would have suspected around these levels. So that's definitely a concern to watch. But do remember, we've had a lot of dark pool activity. That is the largest fund style activity usually we see that's come into a couple of funds, both being in Bitcoin and Ethereum over the last week. So someone is buying this dip most likely, but we haven't seen the flows going up. Let's now talk about the SPY. Could it be that this is a false break? Could it be that retail traders are correct and that maybe the back end of February is going bad? Well, we do need to remember the largest activity has actually gone through the middling price of the range that we've recently seen on the S&P 500, NASDAQ, etc. A large trade also came through last week, and that so far led into, of course, a rally and an all-time close high. Now, this is really important to think about, because if we do see price, let's say, sell underneath, in particular this zone, which is about 590 on the SPY, that's going to show us that the market is most likely turning towards the negative. But for now, things look pretty good. It's the same thing that you see on the Qs here. You can notice a massive closure, a massive rally, a huge amount of buying that we've been looking at throughout the middle of the range, or at least we can assume it's buying at this stage. But if price gives up some of the key levels we'll talk about later on, these are going to be problems, guys. We need to pay attention to these throughout the next couple of months. Now, a lot of people have also asked about treasuries. What's going on with treasuries? Are they turning it? Well, US 20, US 30, US 10, after spiking off the CPI, off the PPI results, have suddenly dumped. The dollar index has absolutely gotten thrashed. So is this going against everything you're seeing in the media and everything that you would think is probably logical? Well, it looks like flows are pushing out, and this could be a massive turn point for treasuries if we continue to see strength. A notable level will be a retake of 90 plus on treasuries. So TLT are definitely one we're watching over the next couple of weeks. Now let's talk about flows. What was strong last week? Well, of course, we had mostly pretty much bullish across the board here, decent smattering. We had a little bit of defensives during the week. Gold has been an incredible performer when you look at it over a 3-week state, and it started to suffer, of course, as of Friday. We'll talk about those big rejections because they are important levels. Semiconductors is now the best performing 5-day rotation, along with technology and communications. And of course, we do have a smattering of defensives in that as well. So it's a rotational market. It looks like the market is actually rotating and it's finding a lot of strength in a lot of different sectors, not just semiconductors, which have been sitting for a long time. Remember, if semis break out, Nvidia's earnings, which will be all important, we've got a special on that coming up before earnings. All of these things are going to lead into a big decision for the markets. So let's talk about the S&P 500 from a close perspective here. And you'll notice it is an all-time high close on the SPX, and it's closed above the call wall of 6,100. Now, what does this do? It opens up 6,200. It opens up gamma squeeze. It opens up so many positive actions from the market. And of course, a lot of bears are going to say, but it does open up the possibility of a false break up and then movement down. Now, if that happens, we're going into potentially a Wyckoff distribution. And if you know anything about Wyckoff distributions, they are very negative events. So, of course, we have to keep both eyes open here, not just one that goes bullish, 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 although bullish is probably the best play still. But we do need to be watching those quite closely. Now, let's take a look at the options levels for when the market does open. Remember, it's closed on Monday, guys, public holiday. So it's going to be a Tuesday open. These are the levels that you'll want to be watching. And you'll notice there's plenty of blue sky above for the markets in terms of there's a decent chance that gamma squeezing could come in. We've got the beautiful wicks that, of course, have been holding up, and we've got the snaps of the previous ones. Now, this is very important because it kind of shows you that sentiment is so negative from retail traders, yet flows have been so positive. Let's take a look here at the flows themselves. 6,100 plus, you know it's positive gamma pretty much every day of the week when you're looking at this 6,100 level. And they all push up to the next zone, which, as you guessed it, whether you're looking at March expirations or even February expirations, seems to push to around 6,200, which is the next gravitational zone from an options call perspective. When we go to things like Tesla, let's take a look at Tesla here. Well, Tesla is doing really well because, of course, it went from being horrific, which we thought would happen, down to that 320, 330 range, miraculously gets some contracts, and then, of course, starts to turn around. Now, why is it doing well? Because it's starting to push back into that positive gamma. From going negative gamma to positive gamma very quickly thanks to government contracts, we're going to be looking for a 360 plus breakout over the next week. And if that happens, you guessed it, 375 is the next level. And that makes sense when we look at the charts, and we'll talk about that soon. Now let's go over to Nvidia, probably the most important stock of the next 2 weeks. It's pushing higher, again climbing the wall of worry. Tariffs, whatever else we want to look at. DeepSeek, it got thrashed on that. Remember, a lot of negatives. All was not as it seems. Of course, things have come out since then. And as we know, we're in a competitive time and a new technology that's coming through. But the wall of worry seems to be climbed, and 140 is the key level for Nvidia this week. We break 140, then we kind of hit that gap fill, then we can go to 150, and 150 becomes the next level. We get through 150 after earnings, wow, it's going to be on for markets. You would not want to be going negative against them at that point. Let's talk about whether we've got any concerns. Well, first up, we're not really seeing any concerns in the options market and bonds. So bonds are not showing kind of issues here. Yields have actually started to decline, whether we're looking at the 10-year, the 20-year, or even the 2-year. You'll notice that 2 years stabilized, 10-year, 20-year, 30-year have all dropped. And if they start breaking through all of these massive trend lines, then what that's going to do is activate a lot of treasury trades. So we're going to see a lot of people jumping into treasuries, and there's been quite a large switch last week. What do you guys think in the comments down below? Do you think treasuries have bottomed off? Because if they have, we push past 90, all of a sudden we could be going to 94 or even higher relatively quickly. So treasuries, of course, getting a lot of interest. The equal weight market, certainly interesting. But I think the one we want to be focused on quite a lot is how is the American consumer doing? We often track this by looking at XLY, XLP. Now, for now, the trend has been relatively good. This is an important indicator for us to watch, pulled back a little bit in recent times. Home builders is another one, barely holding on, but it is holding on. So again, the markets are still overall net positive when you're looking at some of the key indicators. So remember this, even if we do get a sell-off in February, for now, it looks like the animal spirits of the markets are very, very strong. And even hedge funds have started to purchase back in when they've been a little bit under hedged, I guess, or underinvested into the markets. Now, let's talk about the elephant in the room, which has got to be the US dollar. It got smashed. So the dollar got hit, and this was totally against what you would suspect. We hit the weekly 20 moving average. You can see here the big sell-off. We've kind of thought for a while now the dollar was going to be weaker than stronger, and it's coming up to a very important area this week, which is going to be that 106 zone. So we need to watch the 106 zone. If it breaks underneath there, this could be a sustained run of moves. And do remember, it's not like the dollar is not getting volume on it. Large transactions going through, and you might think, well, this should lead into strong gold, strong silver, strong everything else. Maybe it will, but as we've suspected, there are still a lot of transactions going through on gold. And while we are probably one of the most bullish channels, I mean, we've been going bullish for 18 months now on gold. Super bull, 3,000, maybe even 3,600 now, but this is still looking like it could be a bit of a consolidation range. So no real surprises. Again, we got that huge breakout, gold pushed against the dollar. Now the dollar's dropping. You might think gold's going to go skyrocketing. In general, I could see it kind of just chilling for a little bit here, taking a breather, and then hopefully moving higher. So of course, if you have missed out on the gold run, is this the best price for gold? I find it doubtful. We'll certainly be looking at some key levels. One of the big ones to watch in the future is going to, of course, be mean reversion, which is the weekly 20 moving average. So of course, we'll be watching that quite a lot. Let's move over to another big position though, because this was silver. It broke out and it went ballistic during Friday. Then all of a sudden, it got thrashed by the end of the day, closing as a massive shooting star candle or pin bar. Now, this is a big rejection. So on the surface of it, you're going to look at this and say, that's hugely negative. I've got to short silver. I would never short off one candle alone. So if you've already been looking at this level and thinking, I'm going to short silver, sure, fine. If it keeps going down the bottom, maybe breaks below 32, you could look at that. But I think we need to look at this as if we go bullish this week, if we end up finding strength in silver, I could see this as being a false candle. So there's a lot going on. I'm still bullish on silver overall, but that was a huge rejection. So we're going to have to pay a lot of attention to the next couple of trade sessions for this particular precious metal. You can see huge boom, huge bust, comes back to the most important first demand zone. Let's see if it can hold here. Some key levels to watch, right where it is right now, 32 if it does hold up, and then somewhere probably around 31.80, 31.75. That level is going to be all important for the bulls to hold up because that is a negative looking candle. Another negative position right now is oil. As we warned in the last video, don't believe in the bullish hammer. Pretty much the trap for retail traders without the right sentiment. For now, it's still sentiment is down on oil, and therefore you need to be paying attention to the next moves. And it's pretty neutral to me. I don't think there's enough left in the sell to make it worthwhile. It's probably not enough left of risk in the risk reward in the buy either. Tesla, what a timing. I still think it's just funny. I laugh at it because it's like we saw it on price action. We knew it was going to happen, and then it happened, and then we even guessed. I think I said this in the private community. Maybe it was even the public stream we usually do on the Monday Open. And I said, I bet you they come out with an announcement down here, and then just like clockwork, it happened. Yeah, this one was almost hilarious, except for the fact that it happens on so many stocks. And you can see here that it drops below that 375, 370 level. And that was it. It went down and down and down and ended up with negative gamma. That's why if it comes back up, you're going to see a lot of issues around 375. Two moving averages, the 50 and the 20 crossing each other. Previous support acts as, of course, potential resistance. And on top of that, we've got, of course, an options call wall. So a lot going on at 375. I wouldn't be surprised for Tesla to reach that this week. Currently trading at 355. And of course, moving up a little bit based on that sentiment switch, which was well timed by everyone. Let's move over here to NVIDIA. NVIDIA close to the 140 call wall. You'd have to think you're going to get there now. And it's again climbing the wall of worry. Now, this is what we call a Wyckoff distribution, which is a very negative style movement. We got the deep seek information. It got thrashed into the most traded zone as we correctly identified together. So well done, guys. Dark pool activity took over. Every fund under the sun was trying to buy down here. And so far, they've squeezed it back up. But we're going to most likely be sitting in this range, you would have to think, before earnings results. And they're coming relatively soon. So, of course, week and a half or so, we'll see the results. If they push through and we see NVIDIA cracking a 150 plus, this thing could be at 175, 180 quicker than you think. And remember, if it gets upgrades across the board, it's going to start driving other semiconductors. One of those semiconductors, which has been in the doldrums, one of the worst stocks of the last couple of years, is Intel. About 3-4 days ago, we see a bottoming process. Huge volumes coming through now for quite a few months since last year. And all of a sudden, it gets some good news coming out for it. Another one that's in the absolute sell-off fest has been, of course, AMD. Some key trend lines to watch, key zones such as 120, a lot of accumulation again. It looks like volume is improving in it. What do you guys think? Do you think AMD is finally going to turn the circle? Again, let us know in the comments. I'm sure many of the other people in this community would be interested to read your thoughts on it. But it is coming up to a very important area indeed. Let's now move over to other markets. So China continues to smash. And I mean, it's smashing. Look at it go. It's probably going to make an all-time high, or not all-time high, but multi-year high at around this point here. And of course, we've taken out the all-important, yes, bearish-looking shooting star or pin bar. Now, this is why you do not short off that. Now, of course, would I rather be buying right now on the 20 daily moving average? Of course. But the thing about animal spirits in Asian markets is when everyone gets sentiment back on, you can see they absolutely rip. And the reason they do is everyone just piles in and then eventually it explodes. I mean, you know how it is. It piles in, big pump, big dump, big pump, big dump. We've talked about this for a while. So congratulations to anyone that's been on this one. Of course, completely against the press, but ultimately it was in the price action. And that's why we've been following it. Let's move over to the US 2K. What's going on here? Well, 23.25 is an important resistance. We were watching this like a hawk. Got the eagle-eyed, red-eyed laser vision on this one, but we have not seen a breakout in smalls. Of course, smalls have been the most crowded trade, but I can tell you, because I'm looking at this, hedge funds, big money managers, they are moving out of it. And why is that important? Because it was so heavily bought by everyone across the board. It's important that they get caught behind. If you've been watching the channel for a while, you guys would know gold, we said it a few weeks ago, maybe 4 weeks ago, 3 weeks ago. Oh, they're underinvested. Boom goes the dynamite. The absolute squeeze comes through and gold goes ballistic. Well, we're watching the same thing in US 2K. And of course, we'll update you when we get some information on that. But I can tell you they're dropping their positions. That's a good sign. That is a good sign for now. Let's have a look at the NASDAQ, big breakout. Obviously reaching into those previous highs here. Again, you can see here the price action was bullish. The sentiment was terrible. And of course, we are watching for the potential trap. But for now, yeah, the bulls are in control. And that seems to be what's going on. What about Ethereum and Bitcoin? They still look okay. I'm telling you, they look all right at these levels. And you might say, these look like rubbish. And what the hell are you talking about? Things going to go down to the moon or the opposite moon. The hell or something, I don't know where it's going. But most people are very negative on crypto right now. And you can see here the 2600 most traded zone getting some spiky, getting a little bit of buys. We saw some dark pulls come through. it's really important that crypto holds these levels though. And it hasn't been what I would say is a huge, V shape, let's go. But certainly some improvement there in both Ethereum and Bitcoin's overall sentiment. And as we said in the last video, if you bought here, you might say, well, that's not that good. It's only up a little bit. Hey, it's still up. It's still turned that area. It's a very important zone for this to hold. So, of course, we'll be watching Bitcoin. We'll be watching Ethereum or XRP, whatever, Solana. Doesn't matter, any of the big coins. And we'll be looking and making sure the price action still remains relevant to the bull side. And for now, I would say the bulls are in slight command of the smaller price action. And of course, things change a lot when you start snapping these highs. 100,000, 101,000, those kind of levels will be important. For the news ahead, bank holidays for both CAD and US. And of course, you've got here the all important for Australians RBA monetary statement. Will Australia start to cut rates where I'm from here? Well, we'll see. I'm going to go with it's a tough one, isn't it? Anyway, we'll see. Who cares, really? The point is it's going to be what it's going to be, and you should be price action-based trading. Got nothing to do with what your thoughts are. My thoughts, your thoughts, probably not that important. We've got President Trump speaking tentatively, so just coming out with a time there this week, which could move the markets, of course. And then you can see here all sorts of statements coming out from several central banks around the world. Unemployment claims at the end of the week. And then we've got here a bunch of European news coming out on Friday and flash services PMI 9:45 New York time. Now, what really is going to be important is continuation of earnings, and I would say options flow. Options flow is probably the big thing and story of this week, and we'll be watching it together and, of course, tracking it. So if you enjoyed today's video, please remember to subscribe. Check us out on X. We'll be posting a whole bunch of charts, such as some of the ones you've seen in today's video. And, of course, if you want to find out more about how we find good positions, how we use data, and a statistical approach to markets that is totally different to what most people do. It's more what the big players do. Then you can check out our flash sale. I'd have to recommend Day Trading Masterclass and the Advanced Masterclass for sure. Also, if you're from Perth or Brisbane, come out to the events. Couple of free tickets left for both events, so make sure to do it. It's coming up in only a week and a half. It's going to be great to meet you guys. And of course, as we always do at the end of today's video, we need to talk about what our general thoughts are. In general, we have to go with the price action. And for now, it looks like the main markets are still pushing higher. Sentiment sucks. That is usually a wall of worry. And options flow are still going in the positive direction. So as long as markets can continue to grind higher, as soon as they hold each day, that strengthens the case for positive gamma and options flow. We keep resilient. Of course, we keep an open mind to both cases. And remember that 200-day stat. There is a good chance at some point this year that we're going to be reaching that 200 daily, and that could be a good opportunity. Bye for now, guys.